Welcome back. Well, just 10 minutes away from pre-opening rates coming in, but Anuj joins us in the studio as well. Morning, Anuj. Tell us how you're reading a trade setup. Likely to, open up in the red, but what from there?
Morning, Nigel, Sonia and Lata, and Happy New Year to all of you, and of course to all our viewers. Before I talk about today's trade, just want to highlight that the importance of the month of January. You have earnings season starting next week, and then of course the pre-budget build-up, and normally. Also, this year is going to be big in terms of political cues because you have 10 state elections this year almost, and some of them are really big ones. So it's going to be a big year, and January also gives you an indication of which way fund flows are headed. Though in India, of course, we have domestic flows which have taken center stage. Also, this India versus China is going to be a big theme. It sort of started in December. I think it's going to be the theme of 2023. Now, Friday, I indicated that the market was a bit overstretched and could see some shorting. The main reason was the put-call ratio. It was at 1.41. Now it's cooled off to 0.88. And if you see the FI data, there also the long-short build-up has now come down to 50%. They've cut some longs and added some shorts. That's good news for the market. And if you start to see more shorting from FIs and you start to see longs reduced to, say, 35% or 40%, basically markets rally when you have shorts in system. In terms of Nifty positioning, my sense is that you open in a very strong support zone, 18,000 to 18,050. This is a zone in which if you buy, it's worked. And the recent low of 17,967, my sense is that's what traders would keep as a stop loss. And the profit booking zone would be somewhere around 18,225 to 250. On the Bank Nifty, it's a stronger index despite that big fall that you saw intraday on Friday. And, it's likely to give you a good risk reward. Friday low of 42,833 is an important level to watch out for on the downside today.